Federal Reserve. I thought I'd start doing these live just so you guys get a behind the scene look at what I'm doing. So basically, this is my screens. I have 3 screens going on, and we monitor the markets to see what in the world is the Federal Reserve going to do. So here's what we're thinking. The Federal Reserve is going to come out and raise rates 0.75%. So let me put this into context. But what you're seeing on your screen is the MBS market. If you're watching me now, this is why you're here, to see exactly the reaction that we're going to see in the MBS market. Plus, I have other markets up on the screen right here that I'll be sharing you with as well. So we're going to just live go right into this, and I'm going to answer any of the questions that you guys have. So if you have any questions right now for me to just ask, or if you guys would, let me know where you're watching from. I love to see exactly where you're coming from, because I have people from California all the way to New York and anywhere in between. So right now the markets are liking this. So why are you here? Basically, we're trying to figure out what the Federal Reserve is going to do. But then your biggest question here is, then how's it going to affect the mortgage rates? So that's why you're here. We know house prices are crazy. Interest rates are crazy. I'm not FOMO in real estate. I'm just here to provide you guys all this information. So you got to decide, should you buy or should you not? So we got Mila. She's coming in from LA. Thank you for joining us. I'm using a new format today. So let me see how this works. LA, perfect. So if you guys would, we have somebody in New York City. So as you guys know, I can do loans in New York City. For those out there, you've probably been stuck. I've been in this business 33 years and I've never been able to help anybody in New York because of licensing issues, but now I can. Dennis, welcome. We're glad to have you, like always, in here. We have him we got people from Florida, Atlanta, Miami, Michael Batista, dude. I love your channel. I like watching you. So thanks for joining us here today. So guys, this is the screen that I have behind the works. This is how I kind of try to figure out, I won't say kind of, this is how I figure out the direction of where mortgage rates are going, because that's the biggest concern other than home prices for everybody. But we're going to see, here's my outlook. And here, let's see how good I predict this. So I'm thinking they're going to come in and say, we're going to raise the federal funds rate 0.75%. So let me stop there for 1 second. What in the world when they say they're going to raise the federal funds rate, what are they raising? Are they raising mortgage rates? What are they going to do? Okay. So let me tell you what the initial thing is. So they raise the federal funds rate. The federal funds rate is this. When a bank is deemed insolvent is because they don't have enough in reserves at the end of that day. Okay, so what they have to do is, let's say they need $1 billion in reserves and they're $1 million short. Well, they have to go out to another bank and say, hey, we need $1 million. Otherwise, we're insolvent. So we need $1 million. Well, what interest rate do they pay to get that $1 million overnight? Well, the federal funds rate. Okay, that's it. That's it. But here's what happens is the bankers see it and they're like, okay, that's an increase to us. So what are we going to do? We're going to pass on those increases to everybody else out in the country and out there throughout the world, especially because our banking system is worldwide. All right. So that's what's going to happen. So they start pushing up rates in regards to shorter term maturities. So those are personal loans, credit cards, car loans, boat loans, motorcycle loans, all kind of things. But it is not the mortgage rates. So then you're going to say, Dan, why do we follow the Fed? Well, the Federal Reserve had a lot to do with mortgage rates over the last 2 years, but they're normally not that big a participant in this industry. So what they do is they've been coming into the mortgage-backed security bond market and buying up the bonds. Okay, that's what they're doing. What they're doing is they're driving up the prices and they're driving down the yields to make the world a little more safe or housing a little more affordable in the last 2 years. That wasn't the only thing. So we can't put all the blame on the Federal Reserve. The government also came in and just flooded the market with trillions and trillions and trillions of dollars. So when you flood the market with a ton of money, that means people have more money. They're going to spend it. They're going to spend it on goods and services. Those goods and services, there's only a finite amount of those things. So those prices have to go up as well. Inflation, that's what causes inflation. So today what we're going to see is with the Federal Reserve, how they're trying to cure this inflation piece. And it's really taken a chunk out of the housing market. You see, the housing news today was dismal. I expected a lot of this to come. But one of the things that we're seeing is we're not seeing a complete crash in values of properties. Now, I'm going to start changing my channel because I don't want to talk about the values of real estate. I want to leave that up to you guys. Do you think it's a good time to buy or not? That's your prerogative. What I want to make sure is you're educated and informed on the financing piece of this puzzle. Because every day we get quotes from people, or we have people calling in to qualify, and we get them qualified and we give them a rate. Well, in the past few days, we've gotten a lot of loan estimates in, and our rates in a lot of these things are about 0.5% lower than others, or a lot of the other competition. So that's why I ask you guys to send in the loan estimates. This isn't not an infomercial. I'm just prepping you on a bunch of things. But if you've already locked in your rate, okay, we've seen rates, if this is the MBS market. So let's go over the past 5 days. Here's what's happening in the MBS market, okay? As you can see by this chart, as the chart goes up, okay, as this chart goes up, rates are coming down because this is what's happening to the price of the bond. Okay, you can see it's pretty far down here over in this section right in here. Okay, so we've seen rates come down about 0.75% over the last month. So if you're out there and you're building a house, or you're pre-approved to buy a house and you finally found one, please check out with us to make sure that you got the best rate in the whole country. And how you do that is you reach out to us, and all the description is down below. But let's get to the clock. We got about 8 minutes ticking. So let me get to some of these questions so I can answer these, but we're going to watch this live. So let's go over to the stock market. Let's see just give us a base point. This haven't really moved. Look at this. The Dow Jones is at 83. Let me refresh it just to make sure this isn't stuck for some reason. 82.7. The NASDAQ is up 290. So let's just look at 82 and say 290. That's where we're at here. So let me go up to the top. We got people from Dallas. We got people from all over the mix. And guys, I don't, please watch what you say. I don't have a moderator in here today, but let's go through it. We got the first one here is good morning from the Inland Empire in California. Welcome, Cali. Next one we have is Inland Empire. You might have been the same one. Are you guys in the same spot? I don't know. Dennis, we know that you're out in Southern California, southern sunny California. My mouse is giving me a little bit of a hiccup right now. Let's go to the next one. What do we see here? Stuart, Florida. Can't wait to hear. You guys can't either. We got 7 minutes, folks. Atlanta, Miami, Elk Grove. Who's in Elk Grove Village? I was on radio in Chicago, the Chicagoland area for 15 years. It was a Christian radio station, and it was right in Elk Grove Village. I used to go there a couple times a week to do my recordings. If you want to check out any of those, you can check out my podcast. I think it's the mortgage update with Dan Frio. So just Google it and you'll find all that information. The collapse, also known as LA. Thanks, Eccentric. You're on here all the time too. Is home appraisals, let's say this. Let's see, we got our first, is home appraisals done twice for new construction? Well, let me answer those, but as the time clicks for the mortgage-backed securities or the Fed's announcement, we're going to go to that. So when you're buying a home, is home appraisal done twice? New construction? Yeah, usually during new construction, because we don't request it. But sometimes when you're using the builder's lender, they'll request it. They want to get an original value on what they think it's going to be worth. And then once it's completed and said and done, it could be 6 months, it could be a year, it could be 2 years later. What is it worth at that time? And we're seeing a lot of these appraisals coming in quite substantially higher than what the contract read. So you're buying a house for 500. It's not uncommon to see a house appraisal come in after a year's worth of work on that house and so forth, that the appraisal might come in at 160, 170, maybe even 200,000. So it's always good to have it at the end. At the beginning, we don't ask for it because we don't really do construction loans, but we'd love to help you get out of those loans at the end. We got somebody from Scotland. That's freaking awesome. I don't know what time, if you would, post the time that it's out there. I'd love to know what time frame you are on or what time zone you are on. So let's go to the first question. I think it's a question. It's from Mila. And she has, I know you've done it before, but can you please explain the relationship between the federal and mortgage rates? I think I just did. So again, what the federal funds rate is when another bank needs some money, they go out to other banks and they get that money lent to them. And that's called the federal funds rate, the interest rate they're charged. Did you guys know, this will kind of tick you off, that the government actually waived, or the Fed waived, all the fees to the banks during the pandemic, or most part of the pandemic, that you wouldn't have no overdraft fees. Do you know they didn't really pass those on to us, the consumer, and they made hundreds of millions, if not billions of dollars on that? One just tidbit to just kind of tick you off right before the post of this thing. So the expectations, again, is for them to come in with the rates up 0.75%, that does not mean your mortgage rates are going up 0.75%. Let me put some of this into context. We got 4 minutes. I'm going to go back to the chart, the MBS chart, to bring you guys up to speed here. So let's go back. If we go about a month, well, a little bit over a month, here's 3 months. Back in June, right about in here, we had the Federal Reserve come out and have their meeting. Okay. And I think it was right in that time frame. Look what happened since that. Okay. They raised the federal funds rate 0.75%. All right. But since that time, actually rates, as this goes up, remember, guys, you got to always remember this chart is the price of a bond. I don't know why they do it this way, but it is what it is. This is the price of the bond. So as the price goes down, rates go up. So it's flip-flop. Just look at it upside down like this. So you could see that we were down in this category down through here, right in here, okay? And it went up. So again, what happens when it goes up? Well, mortgage rates come down. So when the Federal Reserve came in and they raised rates 0.75%, do you know rates since that time are down, and it's odd to say this, 0.75%. So what happens today and what they do, it's basically just giving us guidance or forward guidance. We know that they're coming to come in unless they completely shock all of us, and we're going to see it live. We're going to see that they're going to come in with a 75 basis points or 0.75% raise in the federal funds rate. What I'm looking at in the bond market, you can see it here live with me. We got mortgage, the bonds prices are up 27. You can see it right here. That means mortgage rates are getting better coming into where we know the Federal Reserve is going to raise interest rates. Why? Okay, because we're looking at forward guidance on a lot of this thing. We know that there's a contraction coming. We know there's a contraction in a lot of things. The pain at the pump is killing us. Between that and food and healthcare and all this other stuff, housing. I don't care if you're renting or buying. The cost of your housing expenses has gone up. Your utility bills, your all the energy pieces of this puzzle. We are, I think, going to have a food shortage. I'm not one of those people out there with doom and gloom. I just did a journey from Chicago to West Virginia to visit family, and normally it's just a drive that you're going like this, and all you see are cornfields. Well, this time, half of those cornfields were like this, dirt. And then I started realizing, wow, is the fertilization in the Ukraine and Russia, that fertilizer issues that we're having coming over to here really starting to play a role there? So we got 1 minute. So let's go over to CNBC. Let's see if they give us anything live. But right here, I want to do just to show you guys what's going on with the market. So we're going to see probably in here this thing make a change here. But let's look for headlines. Fed meeting live. So I did bring this up just to give us a little context on what they're trying to do. So this is what the federal funds rate is. You can see where it's been basically zero for a long time. And then they start raising it. Their projection is to get this up to 3.25. So right now we're about 1.75. So they got about 1.5% to go, and they have several more meetings to go for this year. So let's see. We are just seconds away from all this. So let's go over to the stock market. Let's see if CNBC has anything live for us. Let's see. Let's go here to live blog. Live blog following the Federal Reserve rate decision announces a key. Let's see if there's anything live. No, this is what is the press conference. Okay, so this isn't that piece of the puzzle. So what will happen is the Federal Reserve will come out and tell the markets what they're going to do. Okay, and then they're going to have a press conference in about a half hour to basically just lay it out to everybody. But what we're trying to do is watch this live. So as soon as the markets get the news, we want to see what's happening. So that time has come. So let's see what's going on in the MBS market. Let's check our live feed here, pending sales. Let me just do real quick. There was a lot of flash all of a sudden. We're at 28. Let's go over to the stock market. Where are we there? We're still at 90 and 290. There's no movements there. Let's see. Let me make an adjustment here and go that. Okay, so let me get back to some of the questions because we're waiting for that news to trickle into the markets. The Dow Jones just went up 125 and the NASDAQ just went up 300. There's some news that just came out. Let me see. MBSs are now 36. We got some news guys out. Let me refresh this, see if we got any news information up through here. Pending home sales. I'm going to just do a Google Fed rate decision. And let's see what we got. 13 minutes ago, nothing. 56 minutes ago, 3 hours ago, live blog, 8 minutes ago. Sorry, guys, but I'm trying to give this to you live. This is pretty cool because you will see something happen in regards to some of this. I'm going to go back to the MBS market. They're usually jockeying for position right up until the time that this thing gets announced. So don't be at all, this isn't going to be weird if this thing spikes up or down, or I hate to say it, it might just stay flat. Because what we're going to watch, the biggest piece of this puzzle what we're looking at is what their forward guidance is. Because basically, they've come out and said, we're raising rates 75 basis points. But what I want to focus in on is what are they telling us they're going to do in the future? Are they going to come and say, what a lot of the technicals that we're seeing is rates are starting to come down. The housing market is cooling off, like all the data is showing. So what we're doing is working. So we're just going to continue on this path. So let's continue to watch this. We're up 30. The Dow Jones is up 20. They did it. Here it is right here. You guys can't see it. We are live right there. Federal Reserve hiked. I don't know why you can't see it on my screen. Let me see if I can shrink this a tad and bring it in the screen. There it is. The Federal Reserve just announced percentage for the second consecutive time to fight inflation. So what's going to happen right now? Let's go to the MBS market. Flat. It expected it, which is fantastic news. The CNBC, let's go over to the stock market. Does the stocks market like it? Not bad. We're up 110 from 80 or 90, and the NASDAQ is up 300 now. So the initial market reaction to a lot of this stuff is okay. Okay, so here's what's going to happen next, and I won't keep you guys on here for this whole duration of time. So what the Federal Reserve did is they came out now and said, here, we're raising rates 0.75%. Now they're writing down all the details to give the fine line and come out and do it to the public and say, here's exactly what we're going to do. Okay, we're raising the federal funds rate 0.75%, but we plan on doing fill in the blanks. Okay, so that's what we're looking for, that forward guidance. What is that fill in the blanks? Is it, hey, we still see the numbers of inflation still ramping like crazy, so we're going to step in and maybe do another 0.75%, maybe even 1 full percent? Or are they going to come back and say, okay, a lot of this stuff that we've done is starting to kind of help bring down everything? Housing's taking a crash in sales right now. We still don't see that in the pricing of things. Gas prices are starting to come back. It should be back even more because we have oil prices. Here, let's go to the oil right here. We want to see this. It's 97. It's up 2%, but we've been trading in this range of 120 to 95. Look through here, and this is what drives you nuts. When gas prices were at the pump, like $6 in Chicago, here's what we saw. We had gas prices at 120, 150. Okay, you can see that here. Here's where we are right now, 97. So what is that, 25% reduction? Okay, I don't think we saw at the pump a 25% reduction there. So a lot of people are starting to really pull back on their travel plans and everything else. So another big piece of this puzzle that's going to be sticky right now is the food inflation. We need food. And everything, how food gets planted, how food gets picked, how food gets processed and delivered to all of us, oil, gas, diesel. So that the one big thing that I monitor as one of the biggest pieces of inflation is the oil piece of the puzzle. So let's go back down and see where the mortgage-backed securities are. Federal hikes is expected, no major reaction. So these are all the charts I have in the background to make sure I inform you guys of what's going on. And when you call us, I know what's going on. So for right now, I'm saying, hey, we're not going to lock you in because I'm looking for rates even to get maybe a little bit better. So if you're locked in with us with a long-term rate lock, we're probably already talking to you. Okay, we're probably going in and saying, here's where you were. Hey, we can get you much better now. Or we had you on an adjustable rate mortgage. Now we can get you on a fixed rate mortgage with the same rate and so forth. So what this is going to happen is the mortgage industry right now is saying, okay, everything's okay there. We are also concerned about housing and the amount of loans we do and the amount of homes that sell. So that's another piece of this puzzle that we're going to continue to monitor. So I won't leave you on here another 15 or 20 minutes. We could, but I'm sure you guys have things to do. But I'll stay here if you guys want to stick around. I might stay long enough to answer all the questions. And then by that time, if the Federal Reserve is doing their speech to Congress, to kind of lay out their whole plan. We'll even show that live maybe if you guys are still around, and we'll take it from there. But we got people coming in from San Antonio. We got Virginia. We got a loan LO from Dallas. Welcome, loan officer. And I love all context in here. If you're a loan officer, you're a realtor, you're a consumer, you're a financial planner, watch these videos. I think they'll be really informative to you. Can you explain the bond yields and how they affect the housing market economy at large? So basically what we watch here is the MBS market. That is basically telling us, or that's the instrument that creates your mortgage rate. The yield on this bond right here that we're watching is the biggest piece of your mortgage rate. So this is what I follow. I follow the Fed just to get the direction of what they're taking, how they're trying to curtail inflation, because they have a big piece of this puzzle. Plus, they were in the market for the last 2 years buying up the mortgage-backed securities market. So when you buy, they're buying like $40 billion a month in mortgage-backed securities. Okay, so that drives in huge demand. Okay, there's only so much of bonds offered. So if you have the same amount of supply but demand's way up, what's it going to do? It's going to drive prices up to the point where there's an equilibrium. There's enough buyers for sellers of the bonds. That as the prices go up, yields come down. So the fear now is they're starting to sell off. We call it quantitative tightening. So they're going to start selling off these bonds. So there's going to be even more bonds in the market, supplies up, demand down. What happens? That drives down the price normally. Well, we're seeing a little of a disconnect right now based on all this. So I'm watching the Fed because I want to see what their plans are doing with inflation, what their plans are on quantitative tightening. Those are the two biggest of the pieces of the puzzle that I follow here. So let me ask, but that was a great, Mila, thank you so much for the question. Let's go to the next one. And hold on one second. Bear with me. I don't have a moderator. So I bear with me. I got to try to figure out. I don't know if you guys saw, I was just on a conference call. Actually, a big conference call with Daryl Eves. He's a YouTube trainer. He trains Mr. Beast. And we were going over, and one of the commentators said that, if you watch CNBC, I watch a lot. And I used to watch Jim Cramer a ton. And he said there was a study done. If you did exactly the opposite of what Jim Cramer did, what would your returns be? I don't know how long the analysis was, so go ahead and look it up. Your returns would be 500% to the positive. So I used to trade off of him, and I used to lose my butt, and I don't trade off of him anymore because I just do my own research and so forth. But that was an interesting topic. I was trying to look that up earlier. Not looking for a crash, just a correction. That's what I'm doing too, and I'll talk about that here in a second. If inflation high remains sticky for the next 2 years, how high can you see the Fed raising the federal funds rate? I'm expecting the federal funds rate to get to 3.25, like they think, or like their proposition is. Because they're kind of behind. They're behind the curve right now. Plus, they have to, build some credibility in the markets, and they can't let this run out of control. So until they really, really see inflation getting nipped in the butt, I don't really think they're going to really change their projections or their forecasts. But what I'm interested in, are they going to continue with the 75 basis points hike, the 0.75% hike, or are they going to reduce that to possibly 50 basis points? I think if they overdo it like they did previously, they might be in a position where at the beginning of Q1 2023, they might have to come in and reduce rates, and that's going to even make them look dumber. Okay, so I'm expecting they're going to go a little bit more cautious this time. They might not represent that in this speech today, but I'm thinking that they're going to come back and probably start moving the pendulum back a little bit to 50 basis points because they might be thinking this is taking too much of a toll on the markets. But the consumer is still out there spending like crazy. We see that in a lot of the research that I do as well. Let's see, dump it. Greetings, Dan. Let's see what this one is. Greetings, Dan. Pearland, Texas. Why are we seniors required to pay ISD taxes? I'm a senior, and not even my grandkids are in the school because they're already in college. ISD. I'm assuming you're meaning your like school taxes. Dude, I don't even talk about taxes. I'm in Illinois. We have the second highest taxes in the country. My taxes, I can almost assure you, are double yours, and my house value is probably the same or not less than yours. So when you're talking about that, I also don't have any kids in the school district anymore. And my school district is they're very well paid, but the kids are very well educated. But yeah, I feel you on that one. But and just it is what it is. Go make sure you go to the election, the poll booth next time, and make sure you cast your vote, because I think there's a lot of people going to vote this year and change maybe what they've been doing. So, what are good websites to get current rates? There's a free site, unless you're a financial, you're in this business and you really want this stuff. I have a description down below. It's this system right here, MBS Live. You can subscribe to it and you actually get a discount if you use it down there. Not a lot of people do it because they're not, I think it's 30, $40 a month. But I use Mortgage News Daily. It's kind of in the realm. If you start using Bankrate and all those other places, all they're trying to do is sell you stuff. And I know a lot of you guys say, "Hey, Dan, you talk too much of a commercial, or you're trying to sell or do whatever." Guys, I'm just trying to give you my feedback on what I think is going to happen in the market. I've been doing this for 30 years. I've seen the ups, the downs, the bad, and the ugly. Plus, a lot of times people are like, "Hey, how do we get in touch with you? And how can we do this? And how do we do that?" That's why at the end, I show you my websites and I give you all the information on how to reach out to us. But if you're a financial planner, a realtor, a whatever, don't call or skip that piece. I'm trying to add chapters to the bottom so you guys can see as this thing goes through. But Mortgage News Daily does pretty good. Most of the sites, they're just sites to sell you junk. I used to have a link on my website that would give you current rates, but a lot of people thought those were my rates, and they're like, "Well, how come when your rate shows this, but when I called it was either higher or lower?" And I'm like, "Well, that's just Mortgage News Daily." So this is the best system I've ever seen, MBS Live, and it's affordable, and you get a ton of stuff in one action-packed section. There's no contracts or anything. You use it. Try it out for free, but use my link below if you would, because then if you do subscribe, you get a little bit of a discount there, and I think I get a little perk too. I'm not sure. What's the next thing is, if you know or can refer me to a proper source. Like I said, MBS Live is what I would do, but it is a paid service, but it's fantastic. Let's see the next comment, and we're going to go back to the markets here. I'm going to be interested to see how Powell defines recession. I am too, because I'm getting a lot of flack from people saying, "Hey, Dan, there's more to a recession just than two negative negative GDPs." We're going to find out tomorrow if the Q2 of 2022 is a negative GDP. That to me, guys, we're in a recession. Okay, I don't care what the technicals come in. It's an election year, so I wouldn't be surprised if the GDP is actually negative, but they maybe miss a number to make it maybe even 0.01 positive. Just saying, no conspiracy theory, but if in an election year, you really want the news to look as great as you can for yourself. But thanks for the comment. Also, as long as employment is healthy, I see houses slowly rebounding. I do too, because if we have the money, we have wages. Wages are going up about 5 to 8% a year, but I know housing's going up dramatically that much more. But here's my thought on this. There is still huge demand for houses. Okay. I think that the appreciation is going to just halt. People are like, "Okay, I'm not paying any more than the next guy just paid." So that's going to basically halt the appreciation. Some areas are going to have a trickle down. It also depends on what your definition of a crash is. So let me put this in a little perspective. If the market, for example, let's say in Phoenix, if that market is up 30% within 1 year, okay, where the normal market's up, say 10. On an average, it's usually up 4 or 5. But if you had a run up of 30%, okay, and then you had 1 year where it dropped 30%, I don't consider that a crash unless you're one of the ones that just bought right at that peak, because you just gave back 1 year of, I'll say, earnings on that. So in the next year, 2, 3, 4, normally it doesn't take 5, 10 years for all this to recover. And that's why I always say, unless you're going to buy a house and stay in it for at least 3 to 5 years, don't buy. I mean, truly, don't buy. But if you're going to stay there 5 years, go back in history. Other than 2008, look at any other time in history where prices dropped, and let's say dropped over maybe 15 or 20%, if they even did that. How long did it take for them to recover? And you'll be pleasantly surprised. So unless you buy at the tippy top, which is probably right now or within the last 6 months, you're going to be okay. Okay. Even those that did buy at that point, unless you're in the really hot markets, I don't think you're going to really see much. And that was a perfect point. I don't know if you're a realtor or just a consumer or what, but if you have a job and you're stable and you like what's going on there, the stock market's going well for you. So all that is, you're feeling good. Okay. Yes, I know the housing payments went up $300, $400, $500 a month, but is there any way that you can maybe curtail some of your spending in another area to pick up that? I know my cable bill each month, I think, is $220. I stopped going to asked my daughter to stop going to Starbucks every morning, spending $8 on a cup of coffee. And that helps. Every little bit helps. So let's go back to this. We still have the MBS market up what? Let's say 25. Basically right where we were. Dow Jones, let's go back to the Jones. Here's what changed in the federal statement. Okay, here's what we want to see, guys. So is he live yet? Nope, not live yet. Here's what's changed in the Federal Reserve statements. Let's see if we can put this in the context. Oh, here it is. This is the coolest thing. Okay, so let's go through this. Recent indicators of spending and production have softened. Overall economic activities have picked up. Okay, so we went from overall economic activity appears to have picked up after edging down. Okay, so if you see my text right here, let me see if I can blow this up a little bit without kind of losing you guys. Let's see. All right, recent indicators of spending and production have softened. Okay, that's a key point. They're starting to see the softening in the economy. That's exactly what they're trying to do. Russia, hold on, I got to bring it back because I'm losing half my text here. Russia war against Ukraine is causing tremendous human and economic hardship. The war and the events, okay, I'm concerned about that, but I'm not concerned about it in this context. The committee seeks to achieve maximum employment and inflation at a rate of 2% over the long run. In support of these goals, the committee has decided to raise the target range for the federal funds rate to 2.25% to 2.5%. So they're saying that they're not going to be as aggressive. Interesting. They're not going to be as aggressive in rate hikes. So this is fantastic news. Well, in a couple different ways. One is they see inflation coming down. Let's see. There is one. Inflation remains elevated, reflecting supply and demand imbalances related to payment, higher food and energy prices, and broader price pressures. Those are the two indicators that I watch. Let me see if there's anything else here, and then we'll put a little bit of a conclusion on this thing. But if you go to CNBC, these are basically, his speech says exactly the same thing every time. He changes just a couple pieces of his context. The voting members are here, and that's it. That is it, folks. So let's see what's going on over on the MBS market again. It's flat. Okay, so let me put this into context for you on what I think is going on here. Let me put this in the background for 1 second. Okay, so the Federal Reserve came in and they're saying on their statement, so they came in and raised rates 75 basis points. But in their statement, their forward guidance is this. We see things cooling off. We see the housing market cooling off. We see a lot of other pieces of the economy cooling off. Jobs aren't getting hit as bad as a normal recession, but we've come off 2 years of nobody even working. Okay, so you got to put some of that into context. But the great news here is they said their future projections is to bring the federal funds rate to 2.25% to 2.5%, from 2.5% to 2.75%. So that means they're taking about 0.25% or 0.25% off the table for this year, pushing up the federal funds rate. What that means is, well, now we're at 2.5%. So they have about a half or 75 basis points more of an upward movement in the federal funds rate this year. So we have multiple meetings left for the year. So that means they're either going to come back down to 50, maybe 25 basis points, or maybe they're going to do one more bam at 75 basis points and then do nothing. Here's my thought on this. The markets like this. We'll go back to the Dow Jones to see what that is doing, because I don't think that's really going to do, but that is huge context. This is exactly what I wanted to show you guys. So let's go back to the stock market and the other markets. We have the Dow Jones up exactly where we were, NASDAQ up exactly where we were. Let's see what oil's doing. Oil's up 2%. That's not a good sign. But all in all, this is fantastic news when it comes to the Fed, because what we could see now is, and you guys out there that are saying, man, I wish rates would go to the moon to crash the markets, the housing market. It's happened. Okay. But This is what we're seeing. So we're getting back to maybe a new normal, or we're getting back to 2018 stuff. I'll put it that way. So this was fantastic news. If you have any other comments, please post them. I'll try to get through as many as I can. I have a meeting in about 10 minutes. So I'll try to answer everything I can. So let's go to it. What do we have here? As long as employment's healthy, I got to agree with you on that one. 75 basis points, 75 basis points. Yes, yes, yes. Let's see what we see here. Guys, I love having you guys here. Federal rate at 20 to 2.25 to 2.25. Okay, so this is right here where Steve-O put in. Right now where the federal funds rate is between 2.25 and 2.5. They said in their statement they want it to be at, what was it, 3.25 to 3.25 to 3 something. So we're about 1% off of where they want us to be. So they have about maybe 1 or 2 more meetings coming up. That here's what I think they're going to do. They're going to raise at the next meeting. Well, it depends on the data that comes in, but the next meeting, what they're probably going to do is raise the federal funds rate another 50 basis points, and then they might be hands off and give it time. Give it Q3, going into Q4, see what happens. I still think when the Russian-Ukraine war ends, it's going to help energy prices substantially. It's going to help food prices substantially. The problem is I don't want housing to keep going up this rapid because nobody can afford a house at this point. I learned a lot yesterday when I had Randy Patrick on my show. He's a housing bubble 2.0, learned a lot. But I still don't feel we'll have to agree to disagree. I don't feel that there's a crash in the market. And again, my analogy of a crash, 40%. 30 to 40% reduction in the market. There's a lot of markets that will not see that. You can be a doomsayer. You can say I'm completely wrong. Only time's going to tell. So let's get a couple more questions, and I got to bail. But thank you so much for joining us. As long as employment is healthy, rebound. Yep, I apologize. I think I got to that one. Go to the next one. Let's see what we got here. Gas, food, closing, rent, layoffs, and no housing be sold. No matter what pronouns they use. And no houses be sold all day recession. You confuse me on that one, but I think we're on the same page. Check CNBC, got that one. What's the next one? I'll read some of these off to you. I think you can read them on the side. It was an economic calendar. It was on the economic calendar. Crypto is moving. Crypto's moving. I own a pretty chunk of crypto, and I get hammered in that category. So I'm glad to see the crypto's moving. Dan, you won the bet with the one guy saying it was going to. Hey, thanks for letting me know. So I'm not as dumb as some people think I am. I apologize if you guys post comments. There's sometimes I don't go in there because I take a lot of this personal. I love doing what I do. Hopefully that represents here that I have people daily, the same people, just bashing me. Guys, let me be as respectful as I can. Move on. You know, the definition of insanity is doing the same thing over and over and over and make you nuts. Move on. Okay, I do this. I've done this for 30 years. I love what I do. I love this business. I'm not going to change. So you know, if the housing market crashes, I'll say, here's what's going on with housing. But my focus is if you guys, when you decide you want to buy a house, I hope from all the stuff that you see me do and how beat it in on the market I am, I hope you at least reach out to us to make sure we can, at least give you a quote. Okay, that's all I ask. Let's see. What time is Powell's presser? It's in 6 minutes. We're not going to watch that. You guys can watch that live. There's probably other events taking place doing that. I won't bore you with that. Basically, we got the context. Let's see what we have here. Dude, don't lie to people. It's not cool. Exactly what I'm saying. Okay, so D. Walt, truly, and with all due respect, I just do my best. I don't know what you're saying I'm lying about. But if you don't like my channel, there's a million other channels out there that you could subscribe to. So I'm not going to waste my time on the ones that just sit here and have naysayer. If you want to learn something, I'd be more than happy to teach you how all this works. But I'm not going to, I don't lie to you. And every time I call somebody out saying, where did I lie? Everything just goes blank. So whatever. Next piece of the puzzle is, so no live meeting, right? Yeah, well, this is live. I mean, we're doing live. This is the MBS market. What's going on in the stock market? What's going on with everything? The federal chairman Powell, he's going to come out and just basically say exactly what they just did. We're raising rates 75 basis points. He's going to read exactly that speech that we just went over. And here's the clicker. If you guys, you let me know. You guys want to stay on here and we can decipher this as we go. Just put in the comments yes or no. And you're welcome to tune out. We've lost about 100 people so far, so I think they got the gist of it. But what happened was the Federal Reserve came out and they said they're raising rates 0.75%. Their future guidance actually came down a little bit, and their verbiage is saying we're starting to see inflation kind of taking a hit on the forefront. So let me see if I can go back to that. Let's see what we got here. He's going to speak, but we can stay on here. Just put down the comments if you want me to stay on, and we can decipher this live. But the audio and everything is going to be pretty bad, so I don't want to put you guys through that. And you can watch it on your own. I was just here to decipher it and show you guys the reactions in the market. And there was none, because there was nothing really out there that was surprising. But the great news is why you didn't see everything crash is their forward guidance came in actually in a good situation. So let's see the next. I'm going to answer a few more, then I got to run. The rates will kick our. I get it. Yeah, they're starting to come down, and honestly, rates are down really since the last Fed meeting. Since they last came out, rates are down 0.75%. So if you locked in a long-term lock with somebody, or you're shopping around or whatever, let us know. We would love to help there. Salute from Fort Worth, Texas. Awesome. We have Dennis. Do unanimous votes? That's fantastic. So what he was saying is there's multiple members of the Federal Reserve who vote. They all voted unanimously to hit it at 75 basis points, that usually doesn't come out much at all. They vary widely. So I'm going to ask one more. I'll get maybe two more, and then I got to roll. A crash in homing transaction doesn't equate to a crash in home medium sales price. A huge increase in will eventually cause a crash in pricing. Again, let the context of crash. What is a crash? Your crash definition might be different than mine. If we saw a rally in a market of 30-40% 1 year, yes, it's happened, and that market goes down 20%, is it a crash? I mean, because if you had that house long term, you've owned it over a year, you picked up 40%, you give back 20, you're still up 20%. I'd take that all day long. So again, a lot of this is context. Mortgage rates was locked yesterday at 5.375. I want to be sure if I made a good decision. If you would, email me a copy of your loan estimate. My email address is dan@therateupdate.com, and all that information is down below. I'll do an analysis. The only thing in your email, if you're like Anna, if you locked in your rate within the last week, you want to find out what this market movement has done for you. Can we get you something better? Email me your loan estimate or your lock sheet. The only thing that's not on that form, that's usually that I get everything from that form that I need other than your credit score. Okay. So just give me what you think your credit score is. I'll give you back a quote. Once you email me, give me within half hour, 45 minutes to get right back with you. I'll give you exactly what we can do. I'll either say, hey man, God bless you. You did great. Or I'll come back and say, what you did, we can do much better. Okay, so that's what I'll probably end up looking at there. Let's see. I'll answer one more. Let's see this one. And if I didn't pick you, please continue to comment. I will try to jump back on later to answer all these questions. 15-year fixed should be at 15%. Those are the comments that have no substance to them. But I agree. I appreciate you coming in here. Mortgage rates was locked yesterday. That's the same one. And this one. There's no inventory of houses, and rates are too high to buy or build. Yep. And that's the position that a lot of people are in. So that's it for right now, guys. Thank you so much for watching. Don't forget, I post every morning what's going on in the markets, especially in the mortgage market, and give you future guidance on what I think and an economic calendar of the game plan. So that is it for now. God bless. Thank you for joining me, and hopefully you learned something. So I will try to put a video together later today or maybe tomorrow, putting a lot of this into context, breaking it down for those that didn't get to visit us. So thanks again for joining us. Thank you for the comments. God bless.